Hey, what's going on YouTube? Welcome Facebook. My name is Patrick France. Glad to be back here with you guys. I do apologize for the cancellation from last week, but luckily we are back here to learn more about the stock advisory app. So before we get started, if you guys can hear me out there, just let me know in the comments that everything is coming through fine, that you guys have the sound coming through. I want to make sure all of that is working there. Hey Drew, hey Mark, Jay, glad to have you guys. Hopefully you guys are all doing well. Hopefully you guys are excited to be back here. I know I am. It's been quite a last week and a half, but finally back in the office for today. Glad to be here with you guys. Today we're going to be talking about the watch list, and I'm going to be walking you guys through some of the tips and ways to be able to utilize the watch list to really get the most benefit out of it for yourself. Watch lists are an extremely powerful tool here at VectorVest that, whether you've been here for years or whether you're brand new to this stock advisory app, is a great place to get started with. They can help you help you with rank analysis of your stocks. They can help you find out, what stocks are, or they can help you manage your stocks that you're currently holding. They can help you find the stocks that you're potentially getting interested in and help you get a gauge of which ones are the best, which ones are the worst, which ones you should spend more time with, which ones you shouldn't spend time with. Awesome. So I see everything is coming through. Thanks, Drew. I see everything's coming through on the YouTube side. If somebody's over on our Facebook, if you guys can see this, just let me know in the comments there. Haven't got confirmation of that. Want to make sure that everything is working before we jump right into it here today. So give me one moment. What's going on? Nope, that's not what I'm wanting. All right, let me refresh it here. Let me make sure I'm still getting everything on the Facebook side. Yep, Facebook is working fine. Awesome. Thank you for that, Paul. Perfect. So, welcome. Once again, I apologize for the last minute cancellation last week. Had some family things come up, but that is hopefully starting to get to the up and up here rather than still dealing with it. So, let's get into it here today. Awesome. Thank you, John. Thank you, Danny. Thank you guys for confirming that. All right, so as always, every single Thursday we go live here. Well, typically every single Thursday we go live here on Facebook and over on our YouTube channel as well, where we talk about the stock advisory app and show you some tips, tricks, and new features coming out with it. Once again, today we're going to be talking about the mobile watch list. I'm going to be showing you guys how to get the most benefit out of it. So as always, we start off taking a look at what's going on in the market here today. Then we'll dive into our topic. And then as always, we'll finish off with the fan favorite of analyzing your own stocks. And I'll show you how you can do so in less than 10 seconds. So with that, let's go ahead and see what's going on here today. So right now the market is neutral and VectorVest advocates caution when buying stocks at this time. If we scroll down a little bit, we get to the color guard. We can see those 3 yellow lights all across the board. So first indicator we look at is the price, which is looking at the prices of VectorVest Composite. We feel this gives us a better representation on what's actually going on in the market because it's not just looking at the Dow's 30 or the Nasdaq's 100 or the S&P's 500, but it's looking at a conglomerate of about 8,800 stocks out there. So it gives us a better representation on what is actually happening in the market. The next one is going to be the RT or relative timing. This is looking at the short-term price trend of the overall market, and it's cast on a scale of 0 to 2. So above 1, the short-term trend of the market is up. Below 1, the short-term trend of the market is down. So therefore, at 0.94, we can see that the short-term trend of the market is slightly lower right now. And then we finally end up with the BSR or the buy to sell ratio. So here at VectorVest, we give a buy, hold, and sell rating on every single stock every single day. And we look at the number of buys and we compare it to the number of sells to get an idea on the overall health of the market. So when there's more buys than sells, the buy to sell ratio is going to be above 1, which would show strength to the market. And if there's more sells than buys, the buy to sell ratio is going to be below 1, like it is now at 0.66, which shows overall market weakness. And then these 3 indicators are comprised to come up with the market timing indicator or the MTI. The MTI is looking at the underlying trend of the market and is cast on the scale of 0 to 2. So above 1, the underlying trend is up. Below 1, the underlying trend is down. So at 1.02, the underlying trend is slightly up for now, but it is moving lower here today. VJ is asking, when you do stock details, can you please add RT ranking under industry group? Yeah, I can definitely take a look into that. Appreciate that, Robert. So after the MTI, we then get the trend column, which shows 2 parts of the trend each and every day. The first part is looking at the short-term or simply weekly trend of the market, which we call the primary wave. So since the market is higher on a week-over-week basis or over a 5-day trading period, the underlying or the primary wave is currently up. And the second part is looking at the underlying trend or just simply reiterating that MTI. So since the MTI is above 1, the underlying trend of the market is also up. And then last but not least, we finally end up with the calls column, which stands for our confirmed calls. Now our confirmed calls are our most conservative timing system here. It's our last signal we get to get into the market and our last signal we get to get out. So as you can see, we still remain in that confirmed down situation for the more conservative investor out there. And then as we scroll down, we take a look at the advanced declines. As always, we like to look at the advanced declines on a daily basis, especially if you're going to be placing a trade. And what we're looking for is a 2-to-1 bias. So if the market's moving higher and you need to buy a stock for the day, you want to see twice as many stocks advancing than declining, and just the inverse. If the market's moving lower and you're trying to open up a short position or maybe buy a hedge or buy a contra ETF to hedge your portfolio, you want to see twice as many stocks declining than advancing. So right now we have 27% of stocks moving higher and 61% of stocks moving lower. So clearly seeing that bearish bias as it stands right now. And then as we take a look at the major indices at the very bottom, the Dow is down about 1/3%, Nasdaq's down about 0.5%, S&P is down about 0.5% as well. Overall, the VectorVest Composite also down about 0.5%. So markets are moving lower right now. We've seen some weakness here. If we go take a look at the VectorVest Composite real fast and just look at the 1 day, seeing what's going on here today. I'm going to maximize this here. So we have 9:30 the open, the far left-hand side, current price shown on the far right-hand side. You can see everything was kind of moving sideways here right out of the gate this morning. But then all of a sudden, right around the 1025 range, we saw a sharp dive in the markets. And then since that point, we've been sliding lower ever since. So we do have some weakness showing itself here today, giving us a little bit of cause for concern. But then again, we do know, the headlines that are coming out. We have the Fed coming out with their Jackson Hole Symposium. So we've had one of the Fed members stating that they think we need to be tapering now. So we do have some potential cause for concern because tapering is what the markets don't want to see. They like high liquidity, low interest rates because that helps the markets thrive. And so therefore we've seen the markets reacting negatively to that news. All right, so if we get back out of here, just wanted to show that real fast. And let's get into our topic here today. So today we're going to be talking about watch lists. Watch lists are an extremely powerful tool that anybody can utilize. They can help you manage stocks on your radar that you're interested in getting into. They can also help you manage your portfolio quickly and easily on the go. So what we're going to do is we're going to go into the watch list section here. And let's see. Let's go ahead, delete one of these. We'll delete this one. There we go. And we'll go ahead and create a new one here today. And we'll go ahead and start entering in our stocks. So if you guys have stocks that you want to see added into this as examples for here, start putting them in the comments, start putting them in the chat, and I'll go ahead and get them added here. While I'm waiting for those, hey there, Rick. Good morning. Hopefully you're doing well. Maria, thank you for tuning in here today from Tampa. Sherry, hello. Hopefully you're well or you're doing well too. I see Jay finally starting to chime in a little bit more. Glad to have you here, Jay. So there we go. Chris is giving some stocks that he wants to see. So apps. Let's see what else we want to have in the watch list here. Let's see what our YouTube side has to say. See if they have any stocks they want to see added into the list. All right. FLGT. There we go. I'm still waiting over on our YouTube side. There we go. SPRT. Alrighty. And I'm going to go ahead and add in some of my own stocks as well because I want to see some of these as well. Extra off, of course, Jay. I couldn't have a watch list without extra off in it, right? TKAT. Oh. TKAT. Got FLGT already, James, but glad to see that's what people wanted. ABBV. There we go. What else we have? BAC. Alrighty. PRFT. I'm gonna go ahead and put it in here. Let's see. AMD, SENS. Hey, there we go. I'm a big fan of SENS right now. SENS. Let's see what else we have. There we go. IMPY. That's fine. We can have as many as we want. That's a great thing about the watch list. AMAT, LAD. AMAT, LAD. TGH. Oh, TGH. See what else we have. DG. We'll do a couple more here. Jose's from Morgantown, West Virginia. Hey, I'm from Charleston, so glad to have a fellow West Virginian here, Jose. Hopefully you're doing well today. OCGN, we can definitely get that out of here. OCGN, we've got about 16 stocks so far. Let's get a couple of more. mRNA. TDG. And then POAI, not familiar with that, so we'll go ahead and add it in. I like having stocks I've never seen or don't typically watch. Makes it fun because it's new. It's a new stock for me, non-biased, and I like that kind of look for it. So creating the watch list, we'll just title this Facebook Live. Today's date is the 26th, so we'll title it 8/26/21. There we go. So once you build your watch list, as always, VectorVest will automatically sort it to bring the best stocks to the very top of the list and the worst stocks to the very bottom. utilizing the master indicator VST, standing for value, safety, and timing. So this way, if you're getting started with it, or maybe you've been with VectorVest for a while, this way you know exactly what stocks you don't really need to focus on or don't need to worry about too much right now. And at the very bottom of it, or if you just click on the little sort button in the upper right, it'll flip the sort and show you which stocks you need to bring most of your attention to right now. So once you resort your watch list, always start off at the very bottom, because this will help you start to manage it. This will identify the worst performers, and if you're getting started, especially if you're new to the markets, this will help you figure out which stock you should free up, or you should, consider getting rid of out of your portfolio, which stock is hurting your portfolio the most. So that way you can free up cash to reinvest into stocks that, will continue to go up or have better probabilities to put the odds in your favor. So POAI is the very first stock in the list. Extra off is the second stock on the list. I know I still am a big fan of extra off. I still hold it in my portfolio. So before we talk about that, before everybody starts commenting on it, I still hold it. I like the stock, and it's gonna stay there. Just right now, going through a rough patch. All right, so POAI, starting to do some analysis. So once you tap on it, you get the 4 main indicators right here at the bottom. Now, all of these are going to be cast on a scale of 0 to 2, so above 1 is good and below 1 is bad. That way it makes it easy for you and allows you to spend less time having to do the analysis on your own. So the first one we come to is relative value, or RV, which is looking at the long-term potential of the stock over the next 1 to 3 years. So at 0.91, that does show poor long-term potential over those next 1 to 3 years. The RS is the safety factor, basically the amount of risk involved with the stock compared to the average stock out there. So below 1 tells us there's more risk, above 1 would tell us that there is less risk. So at 0.4, it does show that this stock has a lot of risk involved with it. Therefore, based off the RV and RS both being below 1, that tells us this stock is a speculative stock. So automatically, within seconds, we can instantly identify what kind of stock this is, whether it is a prudent stock, a conservative stock, an aggressive stock, or a speculative stock. So with both of them being below 1, once again, this is a speculative play here. So therefore, we look at the RT, or the relative timing, that short-term price trend of it. At 0.56, it tells us it's in a steep decline right now. So therefore, the stock is a speculative play, doesn't have a lot of momentum behind it. So overall, the stock is not going to be favorable. If you look at the 1-year chart, we'll go ahead and pull it up. Go to a 1-year look back here. We can see a lot of volatility. It's a pretty low dollar stock. You're typically going to see those lower dollar stocks be more aggressive or be more speculative plays to begin with. And we can see coming into the beginning of the year, it had a big run, but since that point, it's been steadily hitting lower highs and lower lows. So at this point, you have to ask yourself, are the reasons you purchased this stock still true today? If they are, maybe you might consider holding through this sell-off that we've seen with it. But if those reasons have changed, if those reasons aren't still valid right now, then that, brings the answer, or brings the question of, why am I still into it? If you're not into it for the reasons you got into it originally, or if those reasons aren't valid today, obviously that, tells you, hey, maybe I should free this one up. I can always come back to it at a later point, but instead of risking my capital or cash that I've worked hard to get in this and letting it potentially go down even more, maybe I should just close the position out, free up that cash. I can put it into a stock that's going the right way, make some more money, make a bigger return on that one. And then if this stock starts turning back around, then I can get back into it. But at least I'm cutting or stopping the bleeding for right now. So that's what we see with that one. Also, if you look at the RT at the bottom, you did have an RT above the level of 1 for, a couple of months here. But then since that point, minus this one spike, RT has pretty much been below 1 throughout the majority of this year, meaning this stock has been moving lower throughout the majority of 2021, therefore losing you money. When you go back to the watch list, one of the things that we talk about is RT. If you sort the watch list by RT, sort it by the worst RT, another way of looking at RT is not only just, a directional indicator. It's not just a way of seeing, yes, this stock is up, or yes, this stock is down. It also shows the magnitude of that move. So is the stock moving higher, and how strong is that move? But also, is the stock moving lower, or how strong as that downward move. Another way of looking at this is by analyzing it, or looking at, or another way of considering it is that, stocks with the lowest RT are losing you the most money right now. So the lower the RT below 1, the more money it's losing you. And it doesn't make sense to hold on to a position that's losing money. So that's another way of looking at it besides just as a directional indicator or momentum indicator. So pro tip for the day, RT not only shows the momentum or the direction, but can also show you which one is hurting your portfolio the most currently. All right, so we see apps, POAI, Xtroff, IMPUI, all have RTs well below 1, telling us that those are really hurting our portfolio the most. So if you're going to be managing a portfolio utilizing a watch list, then therefore this is a way to instantly identify the stocks to help you decide which losers to cut, so that way you can free up cash to get into stocks that will make us money. So that's the first way of really utilizing a watch list, is just simply managing a portfolio. But what if this is a watch list of stocks that you're potentially interested in getting into once we have the timing on the homepage start to pick back up? Well, the watch lists, as I've said before, are a great way to force rank your stocks to find the best ones to suit you. So as we can see right now, RT is what we're currently ranked by. But if we go to the highest RT, let's say you're a momentum trader. You're somebody who likes taking advantage of big moves, and you want to take advantage of momentum. You're a technical trader. Well, sorting it by RT and then making sure the highest RT comes to the top tells us which stocks have the highest momentum currently. So once again, RT not only shows the direction, but shows the magnitude of that move as well. So being on a scale of 0 to 2, above 1 shows the stock is in an uptrend. The closer to 2 it is, the stronger the uptrend is. So at 1.98, that tells us it's in a really strong uptrend. Right now it's moving almost parabolic, if you will. So if we go pull the graph up, zoom into, let's say, a 3-month, because if you're a short-term trader and you're using momentum, you're probably going to be looking at a shorter time frame on a graph typically anyways. And as we can see, that huge move that we've noticed. So just in the last, month or so, let's go ahead and maximize this here for you guys. Since the 3 and the 8, yes, these are a 3 and the 8 exponential moving average. You can see it notated in the upper right-hand corner of the graph. But since the 3 and the 8 turned positive, the stock went from, where did it close at? $9.75, so $9.75, and now it's trading at $16.58 with a high. Where's the high here today? $17.20. So almost 100% move in a matter of a month. So therefore, we can see how strong that move has been, and the RT told us that without even having to look at the graph. So if you're a momentum trader, obviously this is a great play to look at. If we go to the next one, PRFT has a strong RT. If we go ahead and maximize this, we can see since the 3 and 8, well, 3 and 8 have pretty much been positive for the last 3 months. So a nice strong move, but you can see momentum starting to really pick up when you had that gap here on the 29th of July. And since that point, it's really been running. It closed at, where was it? $94.50, and now it's trading at $110. So about a $15 move in a matter of less than a month almost. Not a bad play whatsoever. For a momentum trader, that's a great trade. You have some really good profits baked in already. And now you're just keeping an eye on your charts to make sure that you lock as much profit in as possible. All right, so there gives that one. Let's go back. Let's go back into the watch list. So that is RT. If you're a short-term momentum player, RT is a great opportunity. Now, if you're somebody who's a swing trader and looking more as an aggressive swing trader, then all we have to do is take this list and sort it by RV or relative value. Putting a primary focus on relative value is an aggressive move, and utilizing the rank by here can help us identify the stocks we should put most of our focus to. So right now we have Mrna as number 1. No surprise, Mrna's been a very aggressive play, had a big run up coming into 2021. We've seen a sell-off, but now starting to make moves once again as the headlines start talking about the Delta variant, new coronavirus cases and all that. So we've seen it be an extremely aggressive play and had some pretty big swings over that time frame. Apps being the second. Now, an aggressive stock is great for the short-term trader, but not necessarily great for the long-term investor, if you will. So with aggressive stocks, there's always going to be a good time to be into it and a time to not be into it. So with apps here, we just go ahead and take a look. Let's go zoom out to a 1 year real fast. So when looking at aggressive stocks, you want to also combine the power of RT, or relative timing, that short-term momentum indicator. So we look here, we see a nice run on an aggressive play, and you've seen a big push from, where was it, $22 all the way up to a high of about 90 roughly. And then as RT started dropping, you're still at $70, $75. Let's say you got out when RT dropped below 1. Avoiding this big pullback, you've saved about $25 a share. You got in at 20, got out at 75, and now avoided a $25 drop back down to 50 where it's currently at. So this is, you can find really big moves early on utilizing the RV for your more aggressive trades. Now, with aggressive trades, expect more volatility like we can see with apps. If we go FLGT, another more aggressive play, we can see big moves, big swings higher, but then big swings lower. So aggressive plays, typically going to see that. You're going to see more volatility with these kind of stocks, but if you're somebody who uses technical analysis, you use timing, they can make you a lot of money and give you really good opportunities to take advantage of going forward. All right, so that's more of the aggressive play. Oh, let's go back here. There we go. So we've talked about, momentum. We've talked about aggressive. Let's go ahead and take a look at the more conservative play. So if you're somebody who's more of a long-term investor, maybe you're interested in dividends, maybe you're just long-term oriented, buy and hold style of investor, don't want to spend a lot of time, constantly buying and selling and buying and selling. You just want to get into stocks you can hold on to for a year, 2 years, 3 years, 5 years, and, expect to see that they are moving higher, or that they're higher at that point than they were when you initially bought them. Well, RS is the best indicator out there to use. We've done studies, we've done hundreds of thousands of studies, if not more, over the years here at VectorVest, and there's nothing else for a long-term investor that can beat out RS. Scott's asking, is that a 3/8 EMA on your chart? Yes, it is. It shows, and Scott, and I'll show it in a second. But yeah, it'll show the 3/8 EMA in the upper right-hand corner, which I'll point out once we get back into another graph here for you. All right, so RS, let's go ahead. Take a look at AMAT. AMAT's the highest RS stock out of this whole entire list. But obviously, like we've talked about and we'll show just in a second, you can find watch lists that are pre-built here for you with the premium list that have, the highest RS stocks out there. So if you're somebody who's long-term oriented, you look at your stocks, you see the strong RS, but you don't really see them matching up with your investment style. Well, we have a place that you can go, which we'll talk about here in a second, to help you find the best of the best. So AMAT, go ahead to the graph settings, because a long-term play, you're not really focused on momentum. You're not really focused on short-term momentum, at least. So you're more worried about the consistency, the predictability of their financial results, because if the company's making money quarter over quarter, they're growing their earnings quarter over quarter, year over year, then you could expect to see that stock price follow suit and move higher over a long period of time. So that's why RS is so powerful. So this is on a 1 year basis. As you can see, a nice steady rise in AMAT, taking a little bit of a pause over the last few months, but as a long-term holding, you're not worried about that sideways move, because you're worried about the longer term play. If we go to a 5 year look back, you've seen a phenomenal run all the way from about 30 till where it's at right now, about 132. So very consistent. You've had a nice steady run, higher highs, higher lows, pretty much all 5 years. So a great play. The earnings steadily rising from bottom left to upper right, price steadily rising from bottom left to upper right. As a long-term investor, that's exactly what you're looking for. So AMAT coming in as a great looking stock. LAD coming in as number 2. Once again, price was moving sideways for quite a bit of time, but then all of a sudden, coming into about a year ago, you started seeing it picking back up, and now really taking off to where it's at right now. You look at earnings were steadily rising for a bit, but really started ramping up around the same time that we noticed price starting to ramp up as well. And you want to see both of these doing the same thing because price typically follows earnings. And, let the trend be your friend. If earnings are steadily rising, the company's making money. Money goes where money grows. So there you go. EPS or earnings per share tells you where the money is growing. And that's where you could expect to see the money going into over a long-term basis. All right. So now we've covered that. If you're more prudent, as always, as we've talked about from the very beginning, utilizing the master indicator, VST, value, safety, and timing, looking at all three indicators combined into one, is a great way to get just an overall general sense of what the best stock is right now from a prudent standpoint. So not really looking at, focusing on long-term, not really focusing on, just very short-term trades, just focusing on somebody who, is more of the casual investor that, holds a position 3-6 months, maybe a year if the stock, does really well, but not somebody that's really set into a specific time frame, more of a trend follower. VST is a great place to go. So as we can see, DVAX, we've looked at that, Mrna, PRFT, AMD, a lot of big names coming to the top of the list. So that's how you can really utilize or get the most benefit out of your own personal watch list. But if you're somebody who has either the desktop application or if you're on the premium version of the stock advisory app, you also have some watch lists pre-built for you to help you find stocks that are suited specifically for your needs. So if we go into over here on the left, we'll go into the premium watch list and top VST stocks. As we talked about, we'll start off here. As we talked about, VST is a great prudent indicator. If you're looking for the highest VST stocks or a cherry picking list to go into to find some potential candidates to get into at the beginning of a swing or beginning of an uptrend, top VST stocks is a great place to start. You can see DVAX, which was in our watch list, also in here, TX, BXC, Crocs. Obviously, these stocks are going to be down right now. The markets were lower as we just saw a few minutes ago. So expect to see even the best stocks pulling back with the overall market. But for now, these are some of the best stocks out there currently. If you're somebody who is more retirement minded or long-term, more conservative minded, we scroll down here. Where is it? Just got to find it real fast. Did I move it? Here it is. Safest stocks with buy ratings. So high RS stocks. As we mentioned, RS, nothing else out there can beat RS on a long-term basis. RS has been tested hundreds of thousands of times, if not more, and there's absolutely no other indicator out there that is even close to giving the kind of results that RS can. So RS, as we see, ALGN, very popular name. These are going to be stocks with the highest RS ratings out of almost 8,800 stocks out there. These are the stocks with the highest RS scores. So Align Tech, been a popular name for quite some time. Let's go take a look at the graph real fast. This is on a 5-year basis as well. So keep that in mind. This is over a 5-year time frame, and the stock gone from $100 to about $700 over a 5-year basis. Looking at the earnings per share steadily rising from bottom left to upper right, showing the company is not only making money, but they're growing their earnings, and they're expected to continue to grow their earnings at least for the next year at minimum. But with the track record that they have here, probably expect it longer than that. If we go to the next one, DHI, so DR Horton, another very popular name, especially throughout this year with housing prices and the supply really taking a lot of the headlines throughout the year. DHI, been a steady performer over the last 5 years. You can see earnings steadily rising, same as price. Price is steadily rising as well. Facebook, nice steady rise in price over the last 5 years. Earnings also steadily rising. And you can see the same kind of pattern going through all of these here. And that's why if you're long-term oriented, looking at the safest stocks with buy ratings is a great place to go. Now, if you're somebody who is looking at RT or you're a momentum trader or a day trader, this is one of my personal favorites. Anybody in the Jockey Club can attest to this. This is one I've added in that I personally made sure I had added into the mobile app, and that is the Daily Boomers % price change. Now, keep in mind you can see pre-market activity with the mobile app, just the mobile app by itself. And this can work This is an intraday updating app or updating watch list, and it'll constantly change as it refreshes. And this is looking for purely momentum plays here. So as you can see, a lot of stocks taking big pops right now. ASND up 24.5%. Ride taking up 24% move higher. ZKIN up almost 23% higher. So a lot of really, really big movers. So if you're a day trader or just somebody looking for aggressive short-term momentum plays, look no further than the daily boomers. It's a great tool that I feel like is definitely underutilized because people don't understand what it's doing. But if you do know what it's doing, it is very powerful and you can make a lot of money using it. So there you go. Daily boomers for the short-term aggressive trades or even day trades here. And that pretty much covers all the topics. We've looked at prudent, we've looked at conservative, we've looked at aggressive, momentum traders. So all these premium watch lists are here for your best benefit to get the most out of it and to help you reduce the amount of time it takes to find stocks that you'd be interested in that meet whatever your goals are or whatever your investment goals are. So that way, you can free up time, spend it more with your family, spend it more outside. I know over the last year, a lot of people have been cooped up inside their homes for a while. You probably want to get out there, but you still don't want to miss out on some of the great gains that can be had in the market. So the Stock Advisory app is the best tool out there to be able to do so you can be on the go, keep an eye on your portfolio, manage everything from wherever you're at. So with that, if you guys have any questions about any of the watch lists or anything that you've seen here so far today, let me know in the comments. Let me know in the chat over on our YouTube side. I know I see our YouTube side seems to be a little quiet right now. So let me know if you guys have any questions with that. And as well, let's go ahead and start to analyze your stocks. So if you have stocks that you want to see analyzed, go ahead, let them or put them in the comments, or put them into the chat, and I'll start analyzing any stock you guys want to take a look at in less than 10 seconds. It's the fastest way to analyze any stock out there, hands down. All right, so I'm going to go ahead, go to the magnifying glass because that's where we get to do it. Sudnet is asking, can you see the DEW in the mobile app? You can't see the arrows like you can in the desktop Sudnet, but you can put the DEW on the VectorVest composite. And as long as you're familiar with the rules, yes, you can see the DEW timing system on it, just not the arrows that you see with the mobile app or with the desktop. All right, so Ender's coming in with Etsy, ETSY. Alrighty. All right, so Etsy has great long-term potential, has less risk associated with it. You're in a nice steady uptrend, so overall the stock's definitely favorable. Let's see, DOCU. DOCU has about average long-term potential, a little bit more risk associated with the stock. You do have a steady uptrend though, therefore making the stock favorable for the time being. Can I use daily boomers as day trades? Yes, Al. Actually, I did a video over on a YouTube channel probably a few months ago where I highlighted, my daily routine, what I typically do in the mornings. And I talked about daily boomers. So yes, you can. I would definitely recommend to go check that out over on our YouTube channel. And that'll show you, kind of give you insight on my daily routine utilizing the daily boomers. Or if you have the desktop and you're interested in day trading, I definitely recommend looking at the Jockey Club because I talk about the daily boomers in the Jockey Club whenever I'm doing that with you guys. So if you're interested in that, definitely check that out as well. All right, so we've talked about DOCU, Tilray, TLRY. So Tilray, poor long-term potential, a lot of risk. It's in a steady free fall. Therefore, the stock is not favorable right now. Jay's coming in. Jay had a list. I think, Jay, did you have a list already written up, waiting for today, waiting for the day I'd be back here? So let's go with Coin. Let's start off with that one. So Coin has good long-term potential, but does have a lot of risk associated with it. It's basically flat. It's not really moving higher, moving slightly lower, if anything. So overall, the stock's favorable. The stock's about neutral, really, more so than anything else. Market has to go up now. Hey, Drew, I've been drinking one all day today. I've been drinking one the last few days to keep me going. So hasn't seemed to really help. Maybe it has, actually. GME had that 27% up day a few days ago, so maybe it is helping. Maybe you're onto something. Mark's asking, did the watch list contents change daily, weekly, or are they set to sort order change? So Mark, it depends on as the stocks change in the list. If there's new stocks that meet the criteria better than other ones, then the list will change. So they could update intraday. They update daily at minimum. But if the same stock meets the criteria the best today and still meets the same criteria the best tomorrow, then that stock won't go out of that list. Daily Boomers is it's the most interactive watch list out there because that one really can change intraday, minute to minute, hour to hour. So, but it's supposed to, and that's why it's, if you're looking for stocks that are really starting to move right away, Daily Boomers can definitely, be that benefit, and that's why it has to be the one that updates so frequently there. All right, can we find 388 crossovers on mobile app? No, the mobile app does not have custom scanning capabilities. I think they're working on that, but I don't know of any updates on that, or where that's currently at. I know that's on the docket, but as of right now, no, there's no custom scanning capabilities on the mobile app, only on the desktop. All right, let's go ahead, take a look at Crocs. CROX. Also, I know I'm out of my typical flow, but if you guys have enjoyed today's session, as always, excuse me, if you guys have enjoyed today's session, don't forget, hit that like button, share this with all your friends, share this with all your family, especially over on our Facebook. If you're on our YouTube channel, make sure to smash that like button. If you're not already subscribed, hit that subscribe button, turn on the notification bell so that way you get updated or notified every day when we have new live content coming out for you. So, had to throw that out there. Okay, so looking at Crocs, you have good long-term potential, you have less risk associated with it, you have a really strong short-term uptrend, so overall the stock is definitely favorable. Let's see, QCOM, or actually HUT. HUT, good long-term potential, but does have a lot of risk associated with it. You have a strong short-term uptrend, so overall the stock is favorable. Let's see, Mrna, M-A-R-A. Mrna has great long-term potential, does have a little bit more risk associated with it than the average stock out there. You have a really strong short-term uptrend, so therefore the stock is definitely favorable. Let's see what else we got here today. Get rid of that. CTRM. CTRM, good long-term potential, does have a lot of risk associated with it. You do have a strong downtrend currently, so unfortunately the stock is unfavorable for right now. ASML, did I already do that one out? Let me go ahead and take a look. ASML has good long-term potential. You have less risk associated with it. You're in a steady, strong uptrend. So overall, the stock is definitely favorable here. QCOM, QCOM, there we go. Good long-term potential. A little bit more risk associated with it than the average stock out there. You do have a slight decline currently in price. Overall, it's a good stock. Timing just not right, or just not the time to be into it right now. Let's see, DEC. DECK. So DEC has good long-term potential, less risk associated with it. You're in a strong short-term uptrend, therefore definitely going to be favorable here. GNK, there we go. Good long-term potential, does have a lot of risk associated with it though, so more of an aggressive play. You have a strong short-term uptrend. Overall, stock's favorable right now. Let's see, MVIS, poor long-term potential, a lot of risk associated with the stock. You're in a steady decline. Overall, the stock is not favorable right now. Jim is asking, don't know if the Create Watchlist and Portfolio from Screener is a new feature to the mobile app, but just found it nice feature. Yeah, so the Screener has been around for a while there, Jim. It's just that it's so similar to the watch list or the premium watch list that it kind of takes a backseat. I have done a few things about it before, but yeah, typically most people tend to gravitate towards the premium watch list. The Screener doesn't get enough love or as much love as it probably should, though. I agree. All right, let's go see what else we have here. CDND. Not finding that one, Jay. CVLT, let's try that. CVLT has great long-term potential, about average risk associated with it. You're in a slight uptrend. Overall, the stock's favorable. As I've said in the past, typically I like to see the RT at 1.1 or greater. At 1.09, I do have a little bit of hesitation with it right now. All right, let's see. Let's get back into it. Cisco, a long-term stock. Let's see. CISCO. CISCO. So Cisco has good long-term potential. You have less risk associated with it. You're in a steady uptrend. So overall, the stock is favorable. With an RS score of 1.35, higher than the RV, this is more of a prudent stock, but this is a good long-term stock. Not the best on the RS ratings that we've seen, but definitely, up there. 1.35, is a fairly strong level to have. Looking at the graph real quick, you see a nice steady rise from bottom left to upper right. Earnings steadily rising from bottom left to upper right over a 5-year basis. So yes, there is some, times where probably you don't want to be into it, but as a long-term hold, the stock is still making money overall. Those 3 dots are always there. You can add them to a watch list, add them to portfolio. There's a lot of ways you can take advantage of that gem, but yeah, that's a good piece to keep in mind. All right, so we've talked about that. Let's go next one. BK or BRKR. There we go. BRKR, good long-term potential. You have less risk associated with this stock. You're in a steady uptrend, so overall the stock's definitely favorable here. SPRT, and I do apologize, guys. I'm getting back into it, trying to. I'm a little rusty here today since I had last week off, so I apologize if I'm not getting to all of them here. All right, SPRT, poor long-term potential. You have a lot of risk associated with this stock. This is a momentum play. This is a speculative momentum play. So if you're somebody who is not comfortable with a lot of volatility, then this would not be a stock for you. But if you're somebody who takes advantage of momentum, maybe a day trader, short-term aggressive swing trader, this would be a great play because the RT is so high. Therefore, making the stock favorable for that specific style of investor. Let's go see CDNS. CDNS has good long-term potential, less risk associated with this stock. You're in a strong short-term uptrend, so overall the stock's definitely favorable. Our low-cost stocks advisable. So Subhadra, the best answer I can give, and I've said this in plenty of streams in the past. A stock that is a low dollar stock is a low dollar stock for a reason. A stock that is a high dollar stock, let's say Amazon, Apple, Netflix, Berkshire Hathaway, those stocks are higher price because they have that consistency and they have proven themselves with a proven consistent track record over long periods of time to get to that price point. So, the low dollar stocks you can definitely make money in. I wouldn't say it's anything bad against it. I trade low dollar stocks all the time and I have fun with it. But at the same time, if you're looking for long-term investing, looking at low dollar stocks would not be a great place to find long-term holdings. You're going to take a lot of risk to get to that point, and you don't have the proven track record for that at that given time. So therefore, the best example I could give is, let's say you have $1,000. You put $1,000 into a stock that's $5, and you put $1,000 into a stock that is $100. So you may have a different amount of shares, but that doesn't matter. You have $1,000 in each stock. If both of those go up 10%, which one makes you more money? I'm going to give a pause for a second. All right, so before everybody's answers should start coming in right about now, it's a trick question. If you put $1,000 into each stock and they both go up 10%, they make you the same exact amount. 10% on $1,000 is 10% on $1,000. It doesn't matter what the price of the stock was. That's why here at VectorVest, we always recommend to dollar weight your position evenly rather than trying to, find the stock you can just buy the most shares in. And the difference between both of those stocks getting to that $10 is the risk involved with it. That $5 stock typically has a lot more risk involved to get to that 10% than the stock that's $100 getting that 10%. So yes, they both made 10%, but the stock, if you're holding the $5 stock, you're most likely going to be having a harder time sleeping at night, worrying about if that stock's going to drop drastically the next day than you are holding that $100 stock overnight. So that's really the difference. Always keep that in mind when looking at low dollar stocks. Yes, you can make money with low dollar stocks, but you are accepting a lot more risk. So if you don't want to accept that risk, stay away from it. If you do like having that riskier play, then obviously go for it. Jeff is asking, when you're looking at a stock, are you looking at current intraday stock or are you looking at a 3-month chart? Depends on what type of trade it is, Jeff. You know, your time frame on a chart is going to is going to change based off what your objective is. If you're a long-term buy and holder, obviously a 1 to 5 year chart is going to be more advisable for you. If you're a short-term swing trader, maybe you're looking at a 3 to 6 month chart. If you're a day trader, obviously you're looking at an intraday chart. Just depends on what type of trade you're looking at the time. All right, let's get back into analyzing it. All right, so that's CDNS. We'll do a few more here today. ORI, let's go ahead and pull that up. ORI has good long-term potential. You have less risk associated with it. You're in a really nice short-term uptrend. Overall, the stock is definitely favorable. Let's see. Cube, okay, CUBE. Cube has poor long-term potential, but you do have less risk with it, more consistency in their fundamentals. The stock is in a steady, consistent uptrend. Overall, the stock's definitely favorable. So this is more of a conservative play, but you have a nice steady uptrend and price looks great over that 1 year look back period. Pool, let's go ahead and put that in. So Pool has great long-term potential, less risk associated with it. You are in a slight uptrend, but once again, it's below that level of 1.1, so I'd be a little careful with that. Overall, it's a favorable stock, but you definitely want to be focusing on RT currently, or pay attention to the RT. AGTC, there we go. AGTC, poor long-term potential, a lot of risk with this stock, so it is a speculative play. You have a strong short-term, or you have a downtrend currently in the stock on a short-term basis. Therefore, the stock is not favorable. Robert wants to take a look at SENS. Perfect. I don't mind looking at that at all. So, SENS, this is a speculative play. It's a biotech stock, so of course, it is going to be more of a speculative play. Biotechs in general have a lot of risk involved with them because they have a lot depending on, you know, one drug or one medical equipment or whatever it is. So there's a lot riding on FDA approvals, that kind of thing. So the speculative play definitely makes sense here. But looking at the RT of 1.3, it does have a nice steady uptrend. Overall, the stock is not favorable, but you know, looking at the chart, this is a stock, if you're going to be trading it, you're definitely going to be looking at the chart, especially on a speculative play. You had some resistance right here, right around 340, 350, right below 350. So let's say 345. You broke out of that resistance and you've seen a nice steady uptrend. Also, as a side note, just because I own the stock, I like this stock. As a side note, over the last filings, institutions have to file their 13F filings every quarter. Based off of, I think it's Goldman Sachs' 13F filings as of the end of June, they have put in, I believe, $20 or $25 million. They have a $20 or $25 million position now on SENS. And, you know, if you know anything about Goldman Sachs, they seem to do pretty good in investing. So they're loading up with it. They may know something that maybe the average investor doesn't know. So I like, follow the big money, and big money is getting into it right now. So there you go. All right. What about Mrna? Let's go take a look. Mrna. Mrna has great long-term potential, less risk associated with it compared to the average stock out there. You have a really nice short-term uptrend. Overall, the stock is still favorable right now. LRCX. We'll do two more after this one. LRCX. So LRCX has good long-term potential, less risk associated with it. However, you are starting to move lower on a short-term basis. Stock is favorable, just not the time to be into it. Let's see. ABBV. We looked at that one, Carol. Let's go BNTX. BNTX has great long-term potential, less risk associated with it. You have a nice steady uptrend, so overall the stock is favorable. And then last but not least, we'll finish off with BAM. And BAM has great long-term potential, less risk associated with it. You have a nice steady uptrend, so overall the stock is definitely favorable. Joseph has one last question for the day. When looking at a stock for timeliness for swing or long-term trades, is a 2 to 5 year 1 week chart best to use? Wait, so you've given me like 5 different scenarios and asking for which chart to use. Are you looking for swing trades or long-term trades? Swing trades, you're probably going to be looking at maybe, I typically prefer daily charts, but everybody's different. But you're maybe going to be looking at something like a 3-month to 6-month chart, maybe 1 year. If you're long-term, you're going to be looking at 1 year, 2 year, 5 year, etc. And you're also going to be looking at, the earnings steadily rising over those time frames as well. So if you like weekly charts, I know my father likes weekly charts. I personally don't really care for weekly charts. It makes it easier when you're trying to count long periods of time, counting the week by week. But, it is what it is. Everybody's different. If you like weekly charts, by all means, use weekly charts. If you're somebody who likes daily charts, by all means, stick with your daily charts. It's personal preference. Different strokes for different folks. All right, so last but not least, let's go ahead and start to recap here. So right now, we are still 3 ticks into the yellow. We scroll down. RT is still about the same. Buy to sell ratio about the same. MTI about the same. Price still higher on a week over week basis, but lower on a day over day basis. Taking a look at the advanced declines, advances have picked up a little bit. Decliners pulled back a little bit, but not by much. You still have a 2-to-1 bias with the decliners to advances, with 29.4% of stocks moving higher and 60% of stocks moving lower. As we scroll down, the Dow is starting to come back a little bit, only down about 0.1%. NASDAQ coming back a little bit, currently down about 0.33%. S&P's pulling back or coming back a little bit, down about 0.33% as well. Same as the VectorVest Composite, down 0.36%. So while we have seen a slight recovery, don't get too caught into this because the advanced declines tells us that the bias is still to the downside and that, this may just be temporary relief before we see more downward moves lower here today. So with that in mind, be careful out there, be defensive, follow the guidance, let the trend be your friend. So once again, thank you all for coming here today, tuning in here today. I do apologize once again for missing last week. Had some things come up that took my time and took me away from the office, but it's good to be back here and good to be back with everybody and continuing to be with the community that we have here. So as always, if you haven't already, hit that like button, share the video out with your friends, share it with your family. If you're on our Facebook page and you haven't already liked the VectorVest Facebook page, go ahead and like the page. That way you get notified every time we have our live streams here. If you're on our YouTube page and you haven't already subscribed, what are you waiting for? Go ahead, hit that subscribe button, turn on notifications. That way you get notified of all the content that we have coming out for you over there as well. So until next time, take care, be safe out there, have a great weekend, and I'll see you guys next week. Bye for now, everybody.